What's up, guys? In this video, I'm going to be teaching you everything you need to know about trading futures to start trading today. Maybe you're from Forex to futures. Maybe you're a new trader. The futures market is a lot better than Forex. I just think people are missing like the spread, how it works, contract sizes, tick sizes, what's the difference between lots and contracts, how contracts work, how do you manage your risk. Everything you're going to need is going to be answered in this video. So let's go ahead and get straight into it. So this was definitely the top question. How many hours is it open? 24 hours. It is actually open 23 hours a day, 6 days a week, Sunday night through Friday end of day. So the opening of futures starts at 6 p.m. Eastern, Sunday, Monday, Tuesday, Wednesday, Thursday, and then it closes Friday at 5 p.m. closing. So every day there's going to be an hour break between 5 p.m. Eastern time and then 6 p.m. Eastern time. So 6 p.m. is essentially the start of the overnight session. All right, next up here is calculating position size. So a lot of Forex traders just don't quite understand what a tick is, what contracts are, what sizes. So in Forex, we have the pip, right? And then you also have the lot. So all you have to do is just switch the wording, right? So a pip is in futures, it's going to be a tick. And then a lot in futures is just going to be a contract. So if you switch these two, the wording around, it's the same thing. It's just a different way of saying it. So instead of lots, you have contracts. Instead of pips, you have ticks. All right, so let's break down the transfer of the pip to the tick. How do we do that? So we have a futures contract, right? And then each futures contract has a dollar value based on the tick. So what is a tick? A tick is going to be, if we look at NASDAQ here, this is a NASDAQ futures chart. So if we look to the right here and we come over to the side here, you can see that, we have a dollar between these. But if you zoom in even farther, spread it out some more, now you have 0.250. So there's 4 quarters in a dollar, right? So right here it says 1508.75, and then we have 1750900. So that right there is one tick. And there's 4 ticks in a dollar, right? Or a point. People in futures will call it a point or handles. What they're talking about is 4 ticks together. And with NASDAQ, which you guys would in the Forex space would be calling it NAS, is $20 a point. So that's 4 ticks. If we do a little bit of math here, we just go 20 divided by 4 equals $5, right? So that means that each tick is going to be worth $5. 4 ticks equal $20. So in every dollar move, it results in $20. So if I'm trading NASDAQ here and I want to enter a trade, let's say I want to go short once it comes up to this area here. All right, so it's reached my level, right? So if I know that it's $20 per point per contract, right? So that means where would I have to put my stop? So I'd be thinking I want to put my stop above here. So all we're going to do is just count how many points are from here to here. It's 7 points. So then if you pull out the calculator and you go 7 times 20, because there's $20 per dollar movement, and there's there's $7 or points, and then my stop's going to be away from the current entry price. That equals $140 of risk per contract. So all you're going to have to do to figure out the risk is take the amount of points your entry price from your stop loss is going to be, and then times it by $20, depending. And then if you have 2 contracts, you would just times it by $40. And if you have 3 contracts, you would times it by $60, right? And then 4 would be 80. So let's say I wanted to enter this with 2 contracts here. I sell 2. Now I'm in the market right there. My stop's going to go up here. So it's 7 points. 7, or we have $20 per point, right? It's 7 points away. So 7 times 20 equals 140. But now we have to times it by 2 because we have 2 contracts. So that means I would have to be risking $280. It's really not that complicated once you switch the lots to contracts. Same thing. It's just a different way of saying it. All right. And then what about profit target, right? So let's say I think price is going to come, below this low. Now, how many points away is that? That's 15 points, right? So about 2R. So we just go 15 times 20 because it's $20 per point. 300 and then times 2 because we have 2 contracts. So that would be $600 gain. All right. So there's my profit target hit. Obviously this is just replay, but the market's not open yet, so I can't do it in a live market. But hopefully you understand the risk management of it. It's the same thing. It's really simple. You're just taking the dollar movement and then timesing it by whatever the point value is. So different products have different point values. If you go on TradingView here and you scroll down, you'll see contract size. So what that is saying to you is how much is it per dollar movement? It's $20. So ES, for example, if we go to ES here, ES is $50 per point, but it kind of like moves half as much. So ES is the S&P 500, if you didn't know. All right, the most trading product in the world is this contract right here. So let's go on to contracts. What do they mean? How they work? And what's up with the expiring of them? And will it affect you and your trading in any kind of way? All right. So futures contracts, like I use funding companies, but why, right? Why wouldn't I just use a cash account? So it comes down to initial margin to trade. It's important to understand how much a futures contract is in terms of leverage. And to figure this out, you need to break it down in a certain way. So let's go ahead and do that and find out how much leverage you're actually trading with an E-mini NASDAQ contract. The current price of the NASDAQ is 17,776. Weird price, right? Okay, so to find out how much that contract is worth, we got to consider how much it is per dollar movement. How much does that cost per dollar movement? And we know that that is $20. So if we know that it's $20 per dollar movement, then we're just going to do a little bit of basic math here. We're going to go 17,776 times $20. Pull up the calculator here. So each contract, if you wanted to buy them outright, no margin, just straight pay cash for to trade one with no margin, you just went to see me and you were like, hey, I want to trade one without margin, you would have to pay $355,520. So over $250,000, almost half now of value is in this contract and leverage. So that is why. And then to be able to trade one with margin, right? Your initial margin, companies will give it to you. They are going to ask for, it varies between companies, but currently the going rate is about $750 per contract with NASDAQ and about $500 for S&P 500. You can find some discount brokers that will offer cheaper. So now you see why a lot of traders blow up, right? They're already over leveraged, even one contract with a $50,000 account. You're already trading times 6 of your account value. So with a 50K account with a funding company, they're going to give me 10 contracts to trade with, which is way too much. You should never trade with that, like ever. I've never messed around and put it on, but not unless I want to just fool around, but not seriously. I don't do that. It's like seriously. Get 10 contracts and then it goes up from there. I think the 50K is the best value. I'm actually going to make a video about that. Just trust my word on it. It's the best fit to drawdown ratio, the best pricing out of all the accounts. So if you're in Forex funding, you need to get out immediately. Get out. They're shutting all those companies down. They all have the same shady system where they're messing with spreads. They are deceiving you. They are trading against you. They're pretty much fading you. You go short, they go long. When you make money, they lose money. When they make money, you lose money. So therefore, not only are they getting the fees, but then they're getting the other side of your trade as well. I've done an in-depth video about that. You can click in the right-hand corner right now and check that out, where I break down why you should not be trading with Forex companies. And I called this a year ago. I said that they will start shutting down the US and then it will be worldwide, because I saw that they were scamming people then. And I tried to tell as many people as I could, but obviously some people did not get that message. All right. So in futures, you have CME, which is like in CBOE, or like the actual exchanges, right? And then you have to connect to Tradeovate, Rhythmic, someone else to provide you the data, and possibly even the trading platform. So there's the complicated way, which you would like connect to Rhythmic, which is the data that then connects you to NinjaTrader, that then allows you to trade. But I think this company right here, Tradeovate, is the best option for newer traders for a couple different reasons. You can connect to TradingView, which makes your trading really easy. And most funding companies use Tradeovate, so it's easy to switch over. They have low fees and margin requirements for grows. So micros are going to be, so futures have a lot of reasons why they're better than Forex. Another reason is the risk. So Forex is pretty good on this front too. Um, you can definitely set your lot size, partial lots, to adjust your risk, and you can do that in futures too. So there is the E-mini, which we went over, which is $20 a point. Then there is the the Nasdaq, which is ticker NQ, and then they have the micro Nasdaq, which is MNQ. So pretty much any popular futures product, whether it be the indices, it could be gold, it could be Forex, it could be silver, platinum, hogs, pigs, pretty much anything you can think of is tradable in the futures market. Power, electricity, Bitcoin, micro Bitcoin, it's all there. And most of these have a micro contract, which is 10 times smaller. So you can see here the NASDAQ is $20 per point. And then we have the micro, which is $2 per point. That makes it really easy to, adjust your risk as fit. A lot of traders, even with a 100K account, choose to trade the micro NASDAQ. So if you're going to open your own cash account, you're definitely going to want to do that with Tradeovate. So you can trade micros with very little margin. To be able to trade a NASDAQ contract, you need $75, I believe it is. And then you need, for the S&P 500, you only need 50. So it may not sound like a lot per point, but that adds up really fast, because the futures are $50 per micro. Okay, so they changed it. Account minimum, any. And then day trading margin, that'd be like your initial margin that you have to keep in your account to be able to even trade one. Then you need some money in your balance for the the P&L. So here are the E-minis, right? So NASDAQ, you would need $1,000 to trade one E-mini. And then this is what they're requiring you to have in your account to hold it overnight. So you may be like, wow, why can't I hold it over that 1 hour? People ask me that all the time, because it gaps up quite a ways. If we look at today, it gapped up like 30 points. And then if you start doing the math on, let's say the S&P 500, 30 times 50, that's 800 bucks. Adds up pretty quickly. Couple contracts, now you're looking at 1600. And then Tradeovate has a mobile app. They're very well put together. And then you want to dip your toes in, sign up with them, get a micros account. You can start trading that day. Doesn't take very long at all. They do deposits, same day deposits. Really great futures trading company. All right, let's go over the different contracts and their names and stuff like that, because I get asked about that a lot too. All right, so you can see here, I'm in a trade right now with 5 contracts with a 50K account. Why would I do that? Because I've learned how to keep my risk really small. I'm talking 30 seconds and under time frames. So by trading on such a small time frame, I'm able to reduce my risk by a shit ton. Um, it's just the best way to do it, in my opinion. Otherwise, I think you would be better off trading the micros, of course. So there's one account. I mean, this account I made 1,300, and then this account I made 8,000 or 800. So right there already today, it's Asia session. In the Asia session, I have made quite a bit of money. 1,300 times 2, and then plus 800, and there's still more, so that's 3,400. And then I also have another account with a company called TopStep. I don't think you should be putting all your eggs in one basket. That's why I have multiple funding companies I'm working with. So I've made $250 so far with them too. So let's go ahead and add that in there. So $4,200. Tell me you can make that in Forex, guys. I just don't think you can. I traded Forex for almost 6 months, and yeah, I could make some money, but it was always a struggle with the spread and stuff. And we'll get into that. And you're going to learn that there is no spread, which you're like, what? And the commissions are always the same price with every single broker and company, just about. They may like change like 25 cents, but nothing big. Like Forex, it was like $10, $6 difference with different companies. It's because they're all on some weird shady thing. It's centralized. So let's go to CME's website. I think you don't need to trade. If you're used to trading currency, that's fine, but you don't need to, guys. I think the NASDAQ is probably the best trading product in the world. Maybe the S&P 500. They're really close, really similar. But you don't need anything else than that. If there's enough movement.
Option contract.
All right. So you'll notice that contracts and futures expire. So I think there's a lot of fear around this and misunderstanding. For us traders, it's not really a big deal, guys. We're not institutions. We're not holding these contracts for more than an hour or two. Indices are cash settled. So there's no exchange of product. Other futures contracts such as oil, gold, those are settled physically, meaning if you bought a futures contract, it goes up in pricing. You're going to have to purchase, and then they're going to have to deliver that gold to you. Same thing with oil. But the contracts, if you go like to search for NASDAQ, for example, you're going to see here, right here, that if you push the drop down menu, there's a whole bunch of different ones. What does this mean? I was super confused at first too, to be honest with you. It was like super weird. Even trying to find NASDAQ was hard for me in the beginning. Okay, so you see how this one has a 1 and an exclamation point to it? So this is the never ending contract. This one never expires. They piece it together, and then that way you don't have to keep changing contracts, and you can see way back in the past. And then right here, that's number 1 is the forward month, and then which is the month that has the most liquidity. And then in Q2 is the next month after that. So right now we're currently in the June contract, and it's every 4 months. June, July, I guess September. Every 3 months. Let me take that. So every 3 months the contracts expire. And you just simply wait until the platforms tell you to do it. They all tell you to do it. All the funding companies will reach out to you. Pretty much every trading platform will tell you, hey, the new contract is this and this. Please switch to it. But if you're trading on TradingView, just keep it on NQ 1 exclamation point, and you'll be good. But the NQ stands for NASDAQ. The M stands for month code. For June, it's M. If we go to December here, see how it says NQZ. And then if we go to December 2025, it's NQZ. So each month has its own code. And then the 4 stands for 2024. That's really it. It's pretty simple. If you go to ES, same thing. We have ESM 2024, ticker ESM4. That's the June contract. Yeah, so what they mean by front month is the closest month that has the highest liquidity. So there's some point that September and June, people are going the institutions and people carrying these for hedges and stuff like that, they're going to have to switch over. So at some point they have to sell the June contract and buy the September one. And then liquidity starts moving over to that one. There is a little bit of price action difference during that like week. Price is a little bit choppier and it's a little bit harder to trade, especially when you get in the last like couple days. It becomes pretty choppy, but then it goes away and price goes right back to normal. It's just from them having algorithms buying and selling, buying and selling. So they sell here, causes it to go down, they buy there, and then it just creates this like fluctuation in pricing. And then sometimes there'll be a price difference between this contract and the next month's contract, and that's when you'll see the BADG backward adjusted, which that just like pieces them together, splits it the middle, and then pieces them together. All right, so that is the contracts. We went over the risk. Now, this was one of the other questions is what in the hell do we mean by RTH and ETH? I get asked this quite a bit. So, you know how I said that it's 6 days a week, 23 hours a day? There's that hour difference, right? So, I have my chart set up here with this indicator that splits it for me. So, if you go to this indicator, I suggest you download it. It's my favorite indicator, just because I like to see the separation of the sessions. So if we go to ICT, IPTA boxes, and you can use any box, any indicator that allows you to split up into different times. So all this does is just allow me to split it up. And I put my own times in there. I don't use the ICT times because the ICT times are based off of Forex. I'm not a Forex trader. I'm a futures trader. So what's up with NASDAQ, right? What is NASDAQ? Why should you care to even learn what it is and how it works? So if you don't know, the NASDAQ is a basket of stocks. So there's the 100 top tech stocks. So I just started naming off some in my head. These are the ones that at first come think about. AMD and so on. So pretty much any tech stock. So it's 100 stocks. And like, how do they get the pricing? So they group them all together and they have some mathematical equation based on the weighting of it in there. The bigger the company, the more growth, the bigger the position NASDAQ will hold until rebalancing. So at one time, Tesla was the biggest holding in NASDAQ. And now I believe Nvidia is, I'm not sure to be honest with you, but it's probably one of those two. And then it's important to look at these stocks. Like we had earnings today, which I believe it was, let's check it out. Let's see who had earnings today. It caused a huge gap up in price. So a company that I really like for information like this is Spot Gamma. They are quite expensive, but Spot Gamma is looking at the options. So futures have options, like option contracts, not futures contract, but they have option contracts on the futures. Well, liquidity is not that great. You're better off trading like normal options like SPY or SPX, in my opinion. But Spot Gamma is amazing. The founder and owner sends out a newsletter twice a day explaining his thoughts about the market, what he's expecting, and he breaks down anything you can want to know is probably going to be in here. So that's why I chose to come here. It is like $200 a month, but it pays for itself very quickly once you're profitable. So today at the close, it looks like there was a bunch of different ones that reported. We had Microsoft, Google, Intel, Snap, Roku. And tomorrow we have a couple different other companies. So it's just a good idea to understand how this works because these companies, when they report earnings or have big movements, you can use the underlying stock to get an understanding of what the asset might do. I used to, when Tesla's really popular, I would like look for Tesla to be rallying and look for NASDAQ not to be. And then I would jump on that and kind of like, get in there. And if Tesla was crashing, but NASDAQ hadn't reacted yet, I would use NASDAQ, fade it, and then go short because I knew that eventually NASDAQ would catch up. But now there's not much arbitrage left because, all the AI and computers, they suck up all that money laying around. So like, look at this gap today. This is the huge, it's not really a gap. So at 4 o'clock, the stock market closes, right? So if you ever hear me talking, I say the 4 p.m. close. I note this price. It's very important to me going forward. So boom, it's 300 points, guys. 300 points. So you wonder why you can't hold overnight? That is why. It happened in under 5 minutes. It went 300 points. So imagine if you had a cash account and you had $10,000 in there. You had one contract on. You would have lost more than half of your money in under 5 minutes. So that's a $6,000 move with one contract. That's why you can't hold overnight. So some platforms shut your trading down at 4. The good ones allow you to trade until right up until 5 when it closes. So you can see here, this is 4:45 till 6. So I just leave that 15 minutes in there just to like keep a gap. So it's shut down from 4:59, then opens back up at 6. So from 4, going to be right here. So from until the stock market opens back up at 9:30 a.m. is going to be electronic trading hours. So that's ETH. I'll show you guys how to turn that off and on. Okay. So we have our 6 p.m. opening price. And here's another example of a huge gap that would have ruined your account. So that gap was a 60-point gap, one contract, your accounts, you're wrecked, man. And that was just the opening into the Asia session in a day. So this is the start of the Asia session here. And so all the way until 9:30 a.m. the next morning, the market is tradable. You can trade it all you want. I prefer it actually compared to New York session. It's a lot smoother. It's easier to trade. It's less stress. So from here to here, it's going to be your Asia. I call it Asia session, but it's the overnight session. I don't split it up into London and all that shit because I'm not trading Forex. I am trading futures, and futures has a overnight market, an Asia market, and a pre-market. So let me turn this back on. So this is what I consider to be the overnight session, the Asia session. So every orange area here is going to be the overnight session, the Asia session. The pink box is going to be pre-market. So there's a pre-market in stocks. They open up, they kind of start trading, but it's not considered the actual session. So ETH, now we're going to switch it. So we're on electronic trading hours. Now we're going to switch it to regular trading hours. You're going to see it change completely. So now I only have blue on my chart, right? Because now it's only showing me the New York sessions. That's it. So you can see here that this occurs where there's gaps from where it closed at 4 p.m. to where it opened up at 9:30. These are probably the most powerful imbalances in price. Price seeks these out with a vengeance. Any high time frame movement that is not up, if it's retracing because there's a gap lower and it needs to fill it. Like 99.9% of the time, people tell you it's like liquidity with all the SMC way of thinking, but I promise you, look at this and you'll see that there's a gap. And I guarantee if you're a Forex trader right now, crypto trader, any kind of trader, look at the futures contract and you'll see that your product that you're trading off the futures will actually be going towards a gap in the futures market itself. I do this with Bitcoin and Ethereum all the time. Okay, so now we're regular trading hours. That's just the New York Stock Exchange hours. 9:30 to 9:30 a.m. to 4:30 p.m. So the only thing left now is the funding companies themselves. So which futures funding company to go with, and why is futures funding so much better than forex prop firms? So you can see here past, 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 5 past funded accounts. So when I first started, there wasn't very many futures prop firms. It was all mostly forex. I believe forex probably came along before. I think FTMO was the first one, and then some more popped up after that. To say the least, when I first started, the struggle was real. Like, it was super hard to find a company that I could legit trust and knew was not going to rip me off. So I started verified funding companies to verify these prop firms, because when I came up, I got ripped off a few times. I really struggled. I dealt with companies that had million rules, and they would blow my account for no reason at all. Like, I even had one company delete my profits out of my account, even though I screen recorded it. They didn't realize that I was just screen recording my trading for practice, just so I could watch it later. And in the video, you clearly see me make the money. It's the end of the day. You see me cancel all my orders. You go to Rhythmic and the orders just disappeared, even though in the video I was clearly trading it. I had a lot of stuff like that happen. I found a few prop firms. The first one that I really found that really I started getting consistent payouts with was Bullnox. Bullnox was very unknown. I was probably one of their first customers, I believe. And I built I wouldn't say relationship, but definitely a friendship with one of the lead salespeople there, which he was customer service then. Now he's head of sales. I definitely built a friendship with the guy, and I hit a $36,000 trade. They paid me out for that. He actually called me on the phone and asked me about it. This is when they first started out. Now they are so busy, I don't think they have time to do stuff like that anymore. But Bullnox, first company I really got a big payout with that was life changing. Shortly after that was Apex Trader Funding. You guys know about them. They are probably the new Forex guys' favorite prop firm, just because they're the most popular right now. What's the difference between Apex and Bullnox? Bullnox has a much better payout structure. So we'll go over how futures work compared to Forex. I think you'll see that there really is no upside to Forex. Trading product, payouts, evaluation phases, funded phases. There's no upside to Forex. Let's go over how funding works with futures. So we'll just use Apex as the standard here, and then I'll tell you the difference between it and Bullnox as we go along. So the advantages of Apex are they're going to allow you to have 20 accounts at one time. You can activate 20 of them at once. That is huge leverage, because if you consider how much the notional value of each contract is worth, with 20 accounts, let's say you chose 50K accounts, 20 accounts times 10 contracts, that's 200. And then 200 times $336,000 equals $66 million, almost $67 million worth of fucking leverage. So 20 accounts is insane notional value. So you can pass your eval in a minimum of 5 days. There's no max days. Currently, they're running 1 day. So the way Bullnox and Apex work is it is 10 days for each funding payout. You can get up to 2 payouts per month. So this is where that leverage comes into play. And those 20 accounts, each account, every 10 trading days, you can withdraw $2,000. Now they keep you limited like this for 3 months, and then on the 4th month, it's unlimited. So the way you're going to want to play these prop firm accounts is having multiple accounts and then stacking. So if you have 6 accounts, every 2 weeks, you're looking at 12K in profits. way more money than you're ever making at your job. That's for damn sure. Um, but they are kind of like behind the pack on the payout thing. Um, I think they're the only company left that is restricting your payouts for that long. The rest of the companies maybe do it, like Bullnox does it for the first 3 payouts. So you're looking at 3 weeks, 4 weeks until it's unlocked. You can withdraw a minimum of $500 from each account if you choose to. Minimal rules, and they keep breaking the record. So when I originally made this slide in July, they had paid out $5.4 million in July. I believe in the month of March, 8 million in May, April, in March. So they're paying out more to traders in 1 month than most companies are forever. Other big thing about Apex that I like is you can connect. You get to use Tradeovate, and then you can connect Tradeovate to TradingView, which is fucking dope. Everyone likes them. And then this is the part that, like, when I first found out about prop firm trading, especially with futures, I was like, this is too good to be true. There's no way. So profit share, traders are entitled to 100% of the first 25,000. They're paid out 90% of the profit after that. So that's at least 20 plus percent more of a split than you're going to get in Forex is 65 to 80, 85 maybe. And then you may request a payout twice per month as long as you're past your 10 trading days. So that's Apex. Now I would say Apex and Bullnox are the best prop firm for beginner traders. Once you get kind of established, you can look at TopStep and Take Profit Trader. They're both great companies, solid as rock. I prefer Take Profit Trader, and I'll explain why. So if we look at TopStep stats here, since 2020, they paid out $16 million. In October, when I made this, they had 9,000 funded accounts. It only takes 2 days to get your funded account, and they process payouts in 7 hours. And they've been in the funding industry a long time, 7 years. So they're definitely legit, right? A lot of you guys from the Forex land are used to these terms. So after I go through this, let me know in the comments if you knew this or not. So balance-based drawdown is what you're used to hearing, right? And you're used to hearing equity-based drawdown. So your balance-based drawdown is just an end-of-day drawdown. That's all it is. It is what we would refer to as end-of-day drawdown, end-of-day trailing drawdown. So they're going to take your balance at the end of the day, then based on that balance at the end of the day, like once the market closes, then they readjust how much you have left, except for in Forex, it continues to trail you forever and ever. In futures, it stops once you reach your drawdown, once you reach your starting balance. So equity-based drawdown is intraday trailing drawdown. That is what Apex offers. Bullnox offers both. Take Profit Trader has it in the First Pro account. Tick Trader has an end-of-day drawdown. So I personally, trailing drawdown, equity-based drawdown doesn't bother me at all. I've just learned to play the game, but it does affect some people. So with Take Profit and TopStep, you can use the same platforms to trade. The best option is going to be Tradeovate and TradingView. So TopStep, you get your payouts every 5 winning days. You can withdraw half your profits. Take Profit Trader is the best payout structure in the game. Payouts from day one, unrestricted. If you're to make $20,000 day one, you can. When I say unrestricted, it has to be over the buffer. So most funding companies have a buffer per account. So I recommend you go with 50K accounts. So that's what I'll be mentioning here. So a 50K account, you have to make 2,500. Most companies will let you withdraw into that 2,500 in hopes you blow the account. It's a fucking trap. Don't do it, guys. Let 5K get up in there and then withdraw half of it. Otherwise, you're gonna regret it. I promise you that. And that's about it. They're pretty much funding companies are easy. So, what about the spread? Let's go over the spread. You guys are gonna be blown away by this. You guys have been messing with spreads that I'm talking are insane. When I went to Forex trading, I was like, no wonder they have such an issue with this. No wonder they're failing. They have to deal with these companies legit trying to screw them over at every single chance they could get. So I'm gonna pull up my Apex account here. Or let me just pull up actually let me pull up TopSteps. I have funded accounts with every single company that's on my website. As I always say, I'm a trader first. I don't just promote companies because I think they're cool. I promote them because I believe in them and I know that they can help people. And I use them myself, and they changed my life. It's not just because they offer me money. I get offered money all the time to promote companies. I always turn it down. So we're in Asia session right now. If you were to try to trade this in Forex, you would have anywhere from, if you had one lot on, you'd be looking at $15 to $35 in spread per lot. Now, how much are you looking at in futures? 2 ticks. So that is $10 max at any given time. You could be in the worst liquidity in the world with NASDAQ, and it's going to be 2 ticks. High impact news, 2 ticks. Maybe sometimes it will like slip, like when I mark it in the order, it might slip. But compared to the leverage that you're getting per contract, a $40, which is 2 points, that's the worst I've ever seen. And that's usually because of me entering at a bad time when price is like dumping down, I'll enter. And that's why that happens. But it's a non-thing, guys. So I know in Forex it is a thing because they're widening them and they're moving them. They don't move in futures ever because CME controls them. So all these companies have to connect to CME because this is CME's product. That's why this SMC narrative in futures is kind of silly, because if you look through their rule book, they're not going to allow IPTA in here, a predatory algorithm that seeks and creates liquidity. No, this is $1 billion a day market. A billion, guys, with a B. $1 billion moves through this market a day. And you're going to try to tell me that they're going to allow some algorithm in here to run their markets? Come on. No fucking way in hell. All right, so I'm going to go ahead and enter and show you. So TopStep, I would say, has the worst, if you want to call it spread, I guess you could say worst entries. You don't want to be scalping with TopStep. You want to be like kind of like going for a little bit longer trades. So let me go ahead and enter here.
Order filled.
All right, so you see I just entered and I have a negative $5. It's Asia, it's late. If I was to do this in Forex, it would be a huge amount. It would be substantial to my profit and loss. If I was to take 5 trades that night, each one of these I'd be looking at trying to make up for $100 to $200. Our commissions, so pretty much the standard in futures.
Order filled. Order filled.
It's going to be about $5 per round trip. That means you enter and then you exit the market. It's going to cost you about $5, which is nothing. That's why I can always tell if it's a Forex guy in the comments commenting. He'll be like, what about the commissions, man? Why don't you bring that up ever? And I'm like, well, it's always the same usually. And it's a nothing. Obviously, if you're taking 100 trades, yeah, then like, you might have $500 in commissions. But the notional value of these contracts in comparison to $5 is nothing. It'd be one thing if they charged $180, which I'm sure back in the day they did. I know commissions. I had one company, the funded trader, raise their commissions up to $12. It was $6 to enter, $6 to exit. That's a lot. So that can add up and really damage your account. All right, and then the last thing about these funding companies is once you pass their evaluation, you're going to sign a contract with them. It's not really like I've signed a Forex one, and it's not the same. These guys dot their T's and their I's, and there's no like scammy shit going on here. So I guarantee that the companies on my website will pay you out if you use my code, you follow the rules, you provide me the proof that you did, which would just be your trade log. And then I would just go through your trades and verify. I have one person. I have done it. It was his fault, but it was arguable. if it was the company's fault or his fault or if they were being dicks, but I don't think they were. I never heard of them doing something like that to anyone before that. But I paid him out. It is what it is. Um, it's my guarantee. You know, I do make a little bit of money from people using my codes, so it's part of the game. Uh, and it was a $2,000 payout. I felt like it was, you know, a fair thing to do. So you'll sign the contract like I'm doing right now. It's really quick. So you know, Forex, it took me 4 days to get my funded account with the funded trader, 4 fucking days to get verified. I was just like, what the fuck is this shit? So upset when I went there. I think if you guys switch to futures, you're gonna find that you're gonna excel. I've helped over 200 traders now, one-on-one mentoring, and I would say a good 25% of them come from Forex. And then I switch them over to futures just by showing them what I showed you here today. And they quickly find success, they get their footing, and they're blown away. They're like, "Oh my god, I can actually trade. This is crazy." You know, you have so many things against you in Forex that it makes it really hard for you guys to succeed. In the comments below, you guys watched until the end, so I'm going to hook you up with a giveaway opportunity to win a free Bullnox 50K account. Now, what do I mean by free? I mean the evaluation is free. You won't have to pay for it. I'll give you a code. It would be $0. I've had 3 people so far since my giveaways get payouts, which I'm really proud of. Never before got funded before. We're able to take and run with it, and they end up getting a payout. So this giveaway, I will be announcing the winners on stream. It will be on Monday the 29th. So to enter into the giveaway, you have to like this video and then comment below and answer this question. Do you trust a once shady Forex company that is shut down and now they're in the future space? Because a lot of these companies that had their meal ticket in Forex, scamming traders, fucking them over on a daily basis, fading them. The list goes on of the dirty deeds they were doing that are getting them ran out of America and shut down across the world. A lot of them are switching to futures, and I don't like it. I want them to stay the fuck out of our niche here because I don't want them to ruin it. What makes them think that it's okay to switch? I don't understand. Stay in your lane. You can't switch. I don't like it, and I think it's shady. So, do you trust them? I don't trust them. If they did some shady shit in Forex and they're running out of the American market with Forex and coming over to futures and trying to get me to get funded with them, I've had 3 different new companies pop up in my DMs asking me to verify them. I tell them absolutely not. I've had one offer me $5,000 to help promote them. Another one offers me $500 a day. He hits me up pretty often, and I'm not willing to do it because my brand is verified trader funding. I tell them I may consider it, but at this time, I'm not accepting any new companies. I have a perfect mix of companies. So why risk it, guys? They're offering a little bit cheaper of a service, but you have 90% off here, guys. You have 80% off. You have no activation fee. You have $50. You have trade day payouts from day one, 50% off. You have Tick Tick Trader has straight to funding accounts. They have bundles that are only $99 for 3 accounts. You can use my code PROVEN to get 55% off all their accounts. You can PROVEN Direct 10 to get 50% off their no evaluation. And these are the only companies I have on here because these are the companies I've talked exclusively with their owners or somewhere in their upper management because I'm not going to guarantee something unless I believe in it. Straight up, I have to really believe in their company because, for one, if they shut down, which some of these futures places probably will because their Forex side is going to get shut down and they're not going to be able to afford to keep both sides open. So they're going to have to choose one side, and I believe that they will choose the Forex side, the side that they already know, the side that they can get away with scamming people In futures, I don't know if they're going to be able to scam people because of CME. I don't think CME will allow such things to take place. And that's what worries me. Uh, do not use these companies, guys. There's like the funded futures. Don't use them. Don't. Their company in Forex is fucking shady as fuck. So don't use them. You're encouraging them to stick around and ruin what we have. This is such an amazing opportunity in futures right now. Please don't use them. Don't ruin it. You know, find someone else. Find something else. Jeez, it's such a good trade here. Closing it out. Use the ones on my website. They're trusted. They're solid as fuck. And it's no stress. Like you know what's up. So please take that into consideration. Comment below. And that's a wrap, guys. I will see you guys in the charts making that money. So you can see here, boom, $175. Boom. That's how we do it. Boom. Get that money, son. Boom. Catch y'all in the charts later.